Hello, I'm Peter Towers, Managing Director of ESS Small Business and ESS BIZTOOls. Welcome to Empowering SMEs. Taxation understanding is important. It's important for directors of SME companies and committee members of not-for-profit, charities, sporting and social organisations, because whatever we do, there are some taxation implications. What I want to share with you today is some of the key issues on taxation, which will be explored in some depth in the Corporate Governance Network being presented by ESS Small Business. Some of the key items are the small business entity rules. Every year or so, the government of the day has made some changes to the definition of small business. It now is a aggregated turnover of less than $10 million. And for those businesses or companies, the depreciation write-off on assets acquired up to a value of $20,000 available. Prepayments are available to be claimed if expenses for the following financial year have been paid in the current financial year. These can be claimed. And a business with a turnover of up to $10 million does not need to prepare a stock take. I don't quite agree with that from a business management point of view, but we'll talk more about that in the Corporate Governance Network. For companies' operations, there's been some changes to the tax laws, as I'm sure you're all aware, because they're featured in quite an amount of media commentary on what is happening in Canberra. The taxation rate now for an aggregated turnover of a company up to $25 million is 27.5% of that company's profit. For all other companies, the tax rate is 30% for the next 12 months. Some of the other key taxation issues which will be discussed in the Corporate Governance Network include research and development. For a company with a turnover of up to $20 million, the R&D tax rebate is 43.5%. Most companies will need assistance from their accountants in preparing the system to be utilised within your business for the recording of research and development, for the applications that have to be submitted to AusIndustry for approval on the project, and to the Australian Taxation Office if you are planning to claim expenditure to be performed in an overseas location for research and development. Early stage innovation companies are a great initiative of the government to encourage investors to invest in companies who have developed new products, processes, services, technologies. The Australian Taxation Office and AusIndustry are the adjudicators as to whether a company has satisfied the requirements to be deemed to be an early stage innovation company. And in particular, if a company is relying on the principles test as one of the tests that has to be complied with, then it will be necessary to obtain an Australian Taxation Office ruling. And we'll go through all that in far more detail. Businesses of all types need to have an Australian business number, and this also applies to charities and not-for-profits. Every type of organisation, once there is a turnover of over $82,500, including GST, needs to be registered for GST. And there are special forms that need to be completed. If you are registered for GST, or you are making PAYG, pay-as-you-go taxation deductions, then you need to be registered for the lodgement of business activity statements. These can be lodged on a variety of dates. Some are able to be lodged monthly, others 3 monthly, and others on an annual basis. But as a director or a committee member, you need to understand what level your organisation is in and then to make sure that the documentation is being lodged on time. Directors and committee members should be making sure that the PAYG system is operating for deductions from payments made to employees and from any business that you are making payments to who has not been able to produce a tax invoice. Capital gains tax is another very important area when it comes to taxation. There is an exemption from capital gains tax if a business has a turnover of under $2 million, but all of the aspects of capital gains tax will be looked at in a bit more detail in the Corporate Governance Network. Companies, businesses, charities, not-for-profits, sporting organisations all need to be aware of the fringe benefit tax rules. Fringe benefit tax is a separate tax. It is paid at separate times, but it needs to be monitored. Another key expense that directors should be mindful of, and that is motor vehicle expenses. There are rules specified by the Tax Commissioner as to the methodology to be adopted for claiming of motor vehicle expenses. Travel expenses should always be documented and be able to be supported. And for overseas travel expenses, it is necessary to ensure that an appropriate diary has been kept, which clearly identifies the business activities that have been conducted. In private companies, loan agreements are very necessary for any loans that have been made to a shareholder or from a shareholder. The Australian Taxation Office can request that these loan documents are lodged with them. So directors need to be very mindful that this sort of documentation is necessary. The overall concern, though, of directors and committee members is to make sure that you do not infringe the personal liability rules, and that relates to taxation payments being made, PAYG deductions that have been deducted from employees' salaries or wages are made to the Taxation Office, and that superannuation payments are made on time. Otherwise, these can be claimed against you personally. For charities, one of the big issues to do with taxation is making sure that the charity is registered for the receipt of tax-deductible donations. So that's a brief overview of what's going to be included on taxation over the next 12 months within the Corporate Governance Network. Our key presenter on taxation issues is Greg Reddington, a partner in Coots Reddington Chartered Accountants. Greg has also had a significant history in soccer football. He was recently the president of the Queensland Football. So he is very familiar of the problems that sporting organisations have in their day-to-day activities. You can register for the Corporate Governance Network at any time. The annual subscription is $499, including GST. That will entitle you to either attend or to receive the 8 webinar workshop recordings, or you can register to subscribe for the webinar recordings on an individual webinar basis for $78, including GST. If you have any questions on the Corporate Governance Network, please don't hesitate to send me an email, peter@ESSBizTools.com.au, or telephone 1800 232 088. Have a great day. Goodbye.